They had a chance to choke me out, but they didn't. Said, oh, Warren Buffett said out on the airlines? Is that what Warren said? I want to know everything about these fucking planes. I'm doing my own research. I don't depend on 94-year-old guys who live in fucking Nebraska. I want to know everything about these airlines. Give me the information. I went to work. Pen to paper. Pen to paper. I said I like the airlines. I said the airlines are depressed. I said Amelia Earhart. Bang. The Wright brothers. Bang. We fly in this country. Is Norwegian Cruise Line going out of business, even though they said yesterday they may? I do not believe they are. No.
Alright guys, welcome back. I love this guy, he's hilarious. Obviously I do not condone his investment strategy. He's definitely a noob. If you don't know, he's Dave Portnoy from he owns Barstool Sports. And, you know, they're big into gambling, like sports betting. And since the COVID, there was no sports, right? So him and like over 1 million followers just started going onto Robinhood and all of these trading platforms. And they started gambling with stocks. And it's funny because he's killing it, right? And Wall Street hates him, the suits. And he's gone to war with them and SJWs, like everyone. And the guy's hilarious. Eventually, he's going to come around, not to Bitcoin or any of the cryptos, but to mining stocks. I totally think he will. And his following, his million plus. This video here has 3.1 million views. I think the older version had much more, so... Anyways, I can't stop watching the video. It's hilarious. You should watch it. I've posted on my Twitter. You could go to his. It's funny because he was talking about the airlines and Norwegian cruise lines and all those. And it was funny because right before the crash, because of COVID, me and everyone in the private group, we shorted Norwegian cruise lines and Royal Caribbean and all that. And shorting, let's say, if you're not experienced, you still did great. You know, 60%, 70%, 80% drop. But if you put on put options or something, you made like tenfold your money, if not more. So, anyways, that's just good stuff. Let's go to my home. So there's a lot to talk about. A lot's going on today. There was a lot of news. So a lot of news broke today. I will be talking about that. There was a few things I did want to talk about on my twatter here. What did I want to show you guys? All right, here we go. So I will cover the news events. I'll talk about gold and silver because they're going up and up. And the mining stocks are finally breaking out. And we're seeing huge rallies, not in all of them, but some of them. And everyone in the private groups starting to make some serious cash or gains. Paper gains, right? Paper gains. It's a profit once you've sold the stocks and withdrew the money, right? Or you have cash equivalent in your brokerage account. But it's starting to get exciting now. So for the past few weeks, I've told you guys, I've been saying this, that window of opportunity is really closing. And right now it's like closing, like there's maybe a crack open. If you trusted or believed in everything I said, did your own research, talked to your own financial advisor, and started accumulating mining stocks 2 years ago, I started talking about it 3 years ago. Actually, from the start, but I really started talking about it 3 years ago when gold was like at $1,100. Right now it's sitting at 1818. It is Wednesday afternoon around 8 p.m. U.S. Eastern Standard Time. The date is the 8th, July 8th. So if you started accumulating when I started talking about it, like 2-3 years ago, even 2 years ago, um, you could take a small bit of money, right? Like 5 grand, 10 grand, small amount, and accumulate junior micro caps and some larger caps, royalty streaming mining companies, right? And if you started accumulating back then, like you could take a small pot of money and it could potentially, I can't make promises, but turn into a lot. Like wealth, like this is the largest wealth transfer in human history, and it just started, right? And that could turn into a lot, like more than you actually think. Back then, I didn't really want to get people too excited because people's expectations versus time is unrealistic, especially people who aren't experienced. The wealth transfer, it takes years, right? 5-10 years. But are you willing to wait 10 years to turn like 10 grand into a mil or more? It possibly could be a lot more, right? I am. I started accumulating. Okay, so I first started investing in mining stocks like 2008 and 9. And they ran up and I took profits in 2012. Then gold and silver crashed. Went into a 7-year, 8-year bear market, right? And I started accumulating again at the end of 2015. And ever since then, I've been accumulating slowly and slowly. So I have been holding on to stocks since mining stocks since 2015, right? That's 5 years ago. That's the type of patience you need to have that life-changing investment strategy and get the life-changing gains. Because since then until now, my portfolio is like many multiples of what it was when I first started. When I first started out, well, initially when I first started out, it was like $700, but that was a long time ago. That was back in like whatever, I don't even know, like 2007 or something, or 6, or somewhere around back then. Well, I first started investing like early 2000s when I was in high school, but then I took it all out and, you know, went on spring break. But anyways, but when I started taking this seriously. So, but let's say from 2015 until now, and we haven't even had a big boom in mining stocks. We haven't had the breakout. Well, we just might start. We just saw the beginning of the breakout right now. But what I'm trying to say is the party hasn't really started yet. And just holding long for the past 5 years, the mining stocks, and accumulating those shares. I mean, my portfolio is up like a tremendous amount already. So what I'm trying to say is you want to accumulate when the shares are very, very cheap. Now, they're not that cheap anymore. They're starting to slowly go up. Does that mean you're late? Well, you're late for the massive wealth transfer, meaning like throwing a little bit of money in and then 5-10 years later, it's worth like thousands of percent. Like you see thousands of percent gains, like tens of 1,000% gains. You're kind of late to that. But you're still not late for the big wealth transfer. Like you're still going to see 10x, 20x, stuff like that. But if you wait maybe a little longer, and let's say gold breaks out and keeps running and goes above 2,000, these mining stocks, they're gonna just shoot straight up. And if silver breaks out and goes above 20 bucks and just goes like, you start seeing a moonshot in silver and goes to like 25, 30 bucks or something, then the mining stocks, they're really going to move up really, really fast. And then you're going to miss out on the beginning move. You see, most of the money is made in the beginning, not when everything is starting to rally straight up. Because the first inning of the bull market, so let me give you an example or show you. So, because most people just don't get it, that's why they're always late and they just do not understand what I'm trying to say. Now, in the past, I didn't want to get people too excited because then people join the private group and they're like, oh my God, why am I not rich? It's been 2 months. Like, no, man, this is a long-term game. Here, I will add GDXJ to compare it with gold. Okay, well, that doesn't work out as I expected. Well, we can still use it. Alright, so back in 2015, 16, 17, and 18, pretend like this is gold. Right down there, right? And I'm screaming at the top of my lungs. I'm like, hey guys, now's the time to accumulate and sit on them like a dragon on eggs for the next 3 to 5 to, I don't know, maybe 7, 8 years. But 5 years, you'll be happy by the time 5 years passes. So let's pretend this is 2018, and I was rushing the private group and the report and everything so we could start accumulating down here, right? And the candle, let's say, is gold, and let's pretend this is what's about to happen again, because it is. And here's GDXJ, the junior mining stocks, but not really juniors, they're still large caps. And this is just an ETF, a basket of mid-cap, let's say, mining companies, right? So you want to accumulate down here. And right now, we're probably like right, I don't know, like right around this area, let's say. This is just for example, like don't take this too seriously. And we're about to get a huge bull market. But imagine if you did accumulate down here. I accumulated down here, rushed the private group, the report, and you started accumulating in 2018 when I first brought it out. Well, right now you're doing really good, right? But it's nothing, because when gold does this and it starts going above 2,000 and higher, then your mining companies are just going to shoot straight up like this. But let's hold on. But if you accumulated down here, right? Right now your portfolio should be double or maybe more. It depends when you bought and how you positioned it. But it should be maybe double or quadruple, something like that. But then when the mining stocks really start rallying, that's when it has a multiple effect. So if your portfolio already quadrupled or more or 10x, and imagine it 10x again or more, then that's when you could see 5-10 grand turn into over $1 million, right? Or more. And this will likely go into a bubble and it'll be even more. So what I'm trying to say is, if you were to invest now and gold started rallying like next week and shot up to like 2,000 and started going, you would be buying somewhere right around here in the bull market, or right around here, versus that's not exactly, I think it's going to be even better. You would be buying, let's say, around here. So let's just let's take away GDXJ. It's kind of making it confusing. All right, so let's say if you joined the private group and you started buying in 2018 and 19, in the beginning of 2020, you started buying around here. And now you've seen some nice gains. And your portfolio really went up. If you start buying now, you're buying around here. And the multiple effect, if you bought early, is going to be much greater later on during this rally, because you were able to take a small amount of money and accumulate a lot of shares because they were so cheap. But now those shares have doubled. So if you have a small amount of money, your overall gains are cut in half versus what you could have had if you bought back in 2018, 19, and the beginning of 2020. Now, if you took advantage of the March dump and you bought during the dump in March, then you got really lucky, and there was like a week. There was a window of opportunity for you to catch those shares at a huge, like 60-70% discount, and that would have been the equivalent of buying mining shares, stock shares, back in like 2000, the beginning of 2019. Okay, so the early bird gets the worm, and that's all I have to say. And if you miss, let's say the futures markets breaks the LBMA, the COMEX, and the short interest, the shorts get squeezed on the gold futures and the silver futures, and all of a sudden you see gold at like $2,200 or $2,300 or who knows, I don't know, then it's too late. Like, you miss the boat for the wealth transfer, like the beginning part of it, which will be what I'm trying to say is you don't want to miss that. Okay? Because all of a sudden the mining stocks are just gone. They're just, it's like the rocket took off and it's going in the stratosphere. All right? That's another reason why I say don't really try to trade too much of your portfolio. Trade like the max, like 5% of it, because I'm more afraid of missing out than catching a huge sell-off, correction in mining stocks and gold, and I'm more afraid of missing the boat, honestly. Okay? So take advantage of my 20% discount. The link is below this video. It starts off with 20% off. Link's right there. You have to use that link. You click on, you add it to your basket. When you're checking out, up top in yellow, it's hard to see. Sorry about that. It says apply code. You just click that, and then it'll take the 20% off. And then it's like $175, and then $10 a month for the private group. And we research, look at mining stocks, the best ones out there. I have one that might really go up if they get approved. If anyone comments in the comments section, not only will I ban you, but I will ban you out of the private group and everywhere. I'll come after you. All right, do not talk about them. We'll talk about them later once they're up, but not now. So yeah, take advantage of it now. The sale ends Sunday. So let's talk about the news. I'll come back to gold and the mining stocks. Let's just look at so Jim Cramer posted on Twitter. Major central bank balance sheets cross 50% of GDP. If you don't know what GDP is, just stop listening to me. I mean, you should know what that is by now. That's gross domestic product. That's how you measure the economy. Well, they printed, their balance sheets grew by 50% of the global economy. So if that's not going to cause inflation sooner rather than later, I don't know what the hell is. All right. Now I understand because it's the entire global financial system and economy is a debt-driven economy, and there's interest in all that debt, and it does cause deflation. Dollar milkshake theory. Once everyone starts defaulting and then they print even more, which they will, you're gonna see inflation. It's just a matter of time. That's why every world currency, fiat currency, is falling versus metals. That's why gold is record all-time highs in every fiat currency in the world except for the dollar, and that could change very soon. It could change by the end of this week. Major central bank balance sheets. I mean, this is insane. Look at this spike. This is in the past 3 months since the COVID. I don't want to say the word too many times, guys. Major central bank assets as percent of GDP. It's insane. Unreal. Let's go back. What else did I want to talk about? Yeah, I mean, all this central bank printing is creating a huge disparity between the haves and the have-nots. And I'm talking about like the 1.1% and everyone else. Even the upper middle class is going to get wiped out in the end. And the middle class is, I don't even think it's middle class anymore. It's barely holding on. The middle class is the most indebted class, economic class in the world, especially in the US and Europe. Everyone thinks like, oh, they're doing great. They have that white picket fence and nice lawn. They also have the most debt. And if their 401ks and stocks crash, they can't, and they lose their jobs and they can't service that debt, they go from middle to even more poor than the poor people right now. You have to understand that. They just take on more debt. Dentists and doctors, they always have these huge box homes, McMansions, right? They're never even at home. They have like no backyards. I don't know why you even buy that. Like, if you don't have a backyard and you have like a cookie cutter, a box home, and everyone's home looks the same, it's made of cheap materials. It was made in the 90s and 2000s, and you have no backyard, no privacy, like no trees around it. The sun's always beating on them, and they're already falling apart. They're looking like crap. The siding's plastic. It's not even aluminum anymore, and the paper thin shingles on top of the house. I just hate. I don't know why people live like that. The basement walls are really thin. The driveway. It's like they spared no. I don't want to say spared no expense. Like, they have cheap, like 5-inch thick insulation, and then because the square footage is so huge on them, they are paying like massive property taxes on it, right? Those are like your doctors and dentists and lawyers, and they always buy those, or store managers and retail store managers, these types of people who seem to be doing really well, but their cars are leased, or they're paying they have payments on everything from their new cars to their huge homes. They have no equity and no savings, and they're just eating out all the time. And like, maybe they have a little bit of money in their brokerage account, and then they have a decent amount in their 401k. Well, when everything goes to crap and the house of cards falls, they literally will lose everything. And it's sad, but I don't know. You need to self-educate, not rely on others who don't know what they're talking about, right? There's a very small amount and percentage of people who know what they're talking about, like Schiff, and Gammon makes some great videos. Oh, by the way, I posted a really, really good video. He talked about central banks, how they could go bust, and then on top of it, who owns it and all that. Really good video. You have to go in my newsroom. The link's below this video in the description section. The newsroom for the public is free. and I post some really good stuff in there sometimes. Stuff I don't want to talk about because I'm too small, guys. I want to grow still, and I don't want to get taken out too soon. um, so watch that video. It's worth it. It's like 30 minutes or something. It's really good. It's stuff I want to talk about, but I'm not scared to talk about. It's just, well, if I talk about it, I'm gone. All right, you have to understand that, and I don't want to be gone this soon in the game. 4th of July was great. Everyone shot off their fireworks like I was hoping, in defiance of anti-American, politicians. So this was California, by the way, believe it or not. And listen to this; it's hilarious. Which is a good sign for Orange Man, right? This is funny. I don't know what this is. Tom Cruise made a commercial or something that he's running for 2020 right after Kanye. I don't know, guys. It's definitely a very clownish world, right? And things are gonna get weirder and crazier as everything is distorted, manipulated, propagandized. This is just a war of many cartels over power, over the kingdom of, or what's left of it as it deteriorates and they destroy it, and power over us, right? All right, the jobs chart that worries the most. This is pretty fascinating. Total permanent layoffs. Huh. This is in thousands. Permanent is at 28 million. Oh, well, it says 1.6 million permanent layoffs in 4 months. Last time it took 11 months to do that in 2008. Listen, it's way more than that. It's going to be way, way more. In the end, it's going to be like something crazy, like 60 million unemployed permanently. Maybe less by, I don't know. You could say it could be anywhere from like 36 to like 60 million permanent, because I don't know who's gonna win. There will be a little more jobs made if Orange Man could do a ton of infrastructure spending, which I'm not saying that's good for the economy long term. It's not. But it's better than spending it on other things. At least it creates real things in the real world, like roads and buildings and bridges to nowhere. And it does create some jobs, not as many as people think. But what else? And he's gonna try to bring manufacturing back. That's really the only hope for the U.S. long term. If you don't want to end up in, like, I don't know, a breadline, or God knows how horrible it's gonna be. I don't know. There's more news that I'm gonna talk about. So that's related to that. Yesterday's markets closed at valuation of 150% market cap to GDP. So stocks are at 150% to GDP, and the current GDP doesn't even reflect the lockdowns we just had, and the current GDP is way overblown. The economy is really not that big, and even the GDP that we do have that's calculated, like, it's all driven by money printing and debt. So when all the debt comes due, when the interest rates on bonds go up, that GDP is going to just disappear. It'll be negative. And stocks are valued at 150% of the current overvalued GDP numbers. That's why it's a Ponzi house of cards. So during recessions, the green line's GDP. The blue line, you would say, returns to normal. It needs to return to normal, which would be the stock market tends to overshoot GDP to the upside, and then it corrects back to the mean, which is the GDP line, right? The green, and then usually overshoots it. Like, this was sort of normal in the 90s and the dot-com bubble. And then it returned to the mean and then overshot it. And then it returned back up barely overshot the GDP and then fell even further lower. Look where it's at right now. It's in the stratosphere. So just returning to the mean would be a normal correction. But Powell can't let that happen, because if that happens, if the stock market just tries to return to the mean, for one, the baby boomers are wiped out. Two, revenues come from the stock market, a lot of revenues, and then we're going to have huge deficits. And not just that, because the economy is over financialized, what that will do is like beyond Great Depression. I mean, we're already beyond Great Depression. That's what it feels like for a lot of people. Except it's sort of not, they don't feel it yet because they're still getting the stimulus and the unemployment. But once that runs out, or once we start seeing high inflation and your unemployment checks and stimulus basically doesn't buy you much, then you're going to start feeling that Great Depression. But that's why, I mean, it's insane. Powell is so screwed. He can't let stocks fall. He can't let the rates, the interest rate on bonds, like the 10-year, go up. And he's stuck printing more and more just to keep the system glued together. And if you could understand that, then if you do understand that, you're definitely holding physical and some mining stocks. If you don't fully understand it, then you're not holding physical and mining stocks, and you fully do not understand how much pain you're going to go through in the next few decades of your life. And I'm not just talking to U.S. citizens, I'm talking to everyone all around the world. Yes, there'll be pockets of prosperity, but that's like, I don't know, it's like a few areas maybe in Asia and like emerging markets around the world. And by the way, when I say prepare for the worst, that also includes get out of Dodge, and I'm going to talk about that in a second. That also includes escaping, because it might get really bad. I'm hoping we have 4 more years to prepare and not brunt it all, but I don't know how the end of this year is going to pan out election-wise. You guys can look at more Cove stuff on my Twitter. I post a lot of good stuff, and the newsroom. Links below. All right, this is crazy. Corporate bond yields now at record lows, even though debt levels have soared to new highs. The Fed has created its own monster. So the Fed's been bailing out corporations by buying their corporate junk debt because they've been doing stock buybacks for years now, and now it's chickens come home to roost, right? And by the Fed buying all this junk corporate bond debt, for one, there's some serious unintended consequences of doing that. It's nationalizing the markets. There is no free market. And the Fed can't stop buying them. If it stops buying them, I mean, the biggest companies could go under. So that's why I keep telling you guys, the balance sheet could only go up. We're going to see a 20 trillion balance sheet for the Fed. I seriously believe we are. I'm not saying by this year's end. We'll see probably 10 trill by this year's end, or real close to it. And then in the next like 4 years, probably 20 trill, which is insane. Them two money supply will be so big. That's what I'm saying. Inflation will come. And dollar hasn't been very strong as of late. So look at this. Bloomberg Barclays average corporate bond yield is the white line. So there's no yield on corporate debt. U.S. corporate debt to GDP. This is their debt to GDP. I mean, they're all insolvent, essentially. They're just operating because everything's been papered over, and then And that's why we also have the never-ending liquidity open window for repos, because what the repo market does is it just provides like cash short term for these corporations, and then they just give it back on very low interest, and then they take it back out. I don't know. It's just, and this is all insane. It's such a disaster. I mean, it's very sad what the educational system has done to Western people's minds. It's so sad how fast it happened. What is more depressing than capitalist architecture? Breadlines. Alright, so let's get to more news. More interesting news. Let me close this window. Alright. Tesla's shares are just... Listen, Tesla's worth more than like Ford, GM, and like probably Volkswagen or something combined. Something insane. And they sell like 1/50th or one... Like, those car companies sell 100 times more cars than they do, with larger profit margins. Tesla's like barely... Tesla doesn't even have a profit margin. That's what's insane about... This is how insane everything is. You only see this shit at the top of bubbles. Alright, guys? That's all I have to say. I'm not saying short it, because you know how much it costs to short Tesla? Like, a lot. And you have to be a millionaire, basically, to short Tesla. That's why you can't short it anymore. I'm not even shorting it. It's not worth the risk to short it, because what if it just spikes up even higher and then you lose all that money because it costs so much to short it. Spot gold tops 1800 for the first time since 2011. Silver breaches $19. Big deal, guys. I'll talk about that later. Robobank, markets are across the board totally divorced from reality. Facts no longer matter. Yeah. I mean, fundamentals out the window. There's not going to be a trade deal. I'm not going to talk about crude right now. I'm just bullish for the fourth and third quarter of this year. Oh, by the way, I've been saying for the past few videos, second quarter results are pretty much over. They're pretty bad. Everyone ignored them. Third quarter is going to be even worse, because it includes second quarter, what happened, and the first part of second quarter where everything was still shut down. Alright. A down S&P tumble into rider race opening spike as EU closed nears. Alright, never mind. United Airlines sink. I don't really trade the airlines because they always get bailed out, and it's just wild and crazy. Okay, let's Alright, a potential crisis in COMEX gold. I'll talk about this because the manipulation might come to an end very soon. 53% of restaurants closed during COVID lockdown have shuttered permanently, Yelp data shows. 53% have closed permanently. A lot of bars and more are potentially going to close. That is just... You know how many jobs are gone permanently? Because the US economy and even Europe, like 60%, some large portion of it was service sector. All those jobs we've made in the past 10 years since the last recession, it's all service sector jobs. Service sector jobs don't grow in the economy because we're not exporting anything to the world. Do you understand that? All right. Well, buy stocks, right? The market just keeps going higher on worse and worse data. Now, one could argue, well, worse the data, the more money the Fed will print, the higher stocks will go. True, but you're going to get huge corrections because there's just huge pockets of air because this rally was so crazy. This rally from the lows of March, there's a huge pocket of air below it. So we can see a huge correction. I talked about that. I did the charts last video. It's pretty much still the same. We just haven't seen the correction just yet. I've seen a little bit of it. I'm hoping I'll get to the charts in a minute. Maybe I won't. This video's already been 40 minutes long. All right. U.S. budget deficit hits a record $863 billion. That's almost $1 trillion in June. In 1 month. 100 times, 100x increase. That's just wild. It's unsustainable. Those who have been following the record surge in U.S. public debt excluding the roughly $100 trillion in off-balance sheet obligations, $100 trillion in unfunded liabilities owed to the boomers and everyone, right? Which exploded by $3 trillion in just the past 3 months and hit an all-time high $26.46 trillion on Tuesday, will likely have some inkling that the U.S. budget deficit in June will be staggering. Now, in past videos like a year ago, I showed you guys visuals of what $1 trillion looks like. It's something insane. Like you could stack it to the moon and back a few times or something. If you stack $100 bills, like you stack them and it's paper thin, right? Like people just hear trillion, but you can't fathom how much money that is. 1 trillion is 1,000 billion. 1,000 million is 1 billion. But these are numbers that the human mind can't wrap its little brain around, right? Federal government spending. It's insane. Federal government receipts, 12 million rolling year over year. Receipts are how much money they're pulling in. It's just collapsing. This deficit, I mean, look at this. Look at 2005 to 2009 during the greatest recession. And then look where we're at. I don't know how Trump's going to fix this. I really don't. It's some scary data. And nobody talks about it on mainstream, of course. Monthly cumulative deficits. Revenues were 13% lower and outlays were 49% higher through June 2020 than during the same 9-month period in fiscal year 2019. 50% worse. So, I don't know what to tell you guys, but it's insane. Retail apocalypse accelerates. 8,700 stores closing. Number set to rise. That's stores closing. 8,700 right now. It's going to be worse, right? So, commercial real estate mortgages is going to be bigger than the 2008 mortgage-backed security crisis, and that was the housing crisis for retail, the retail market, right, for people. But the commercial real estate, I mean, commercial real estate is much more valuable or expensive. Well, it's not valuable anymore, right? It's bad. I posted in the private group some commercial real estate to short before we even saw the crash, like back in the beginning of 2020. Plunge in consumer credit continues as Americans repay record amounts of credit card debt. So that's weird. Americans are paying off their debt, their credit card debt. That's weird. One of the striking changes to U.S. consumer behavior spawned by the economic shutdowns from the COVID pandemic was the unprecedented surge in personal savings, which exploded to a record 32% of disposable personal income before easing modestly last month to 23.2%. So people are saving more and paying off their credit card debt. Now, thanks to the latest consumer credit data released by the Fed, we know what much of the saving went to paying down debt. So people who still have jobs are still doing all right are paying off their debts. According to the Fed's latest statements in May, total consumer credit tumbled by another 18.28 billion, which, while less than a record of 68.8 billion crash in April, was far below expectations. So people are spending a lot less and they're paying off their debts, which causes depression, like symptoms in the economy, which technically causes prices to drop. But because the Fed's still printing so much, some of it's making its way out into the world. Most of it's making its way into asset prices like stonks, right? So basically, because of this behavior, it's temporarily this summer, this year, balancing out the inflation that's being caused. So that's why we haven't seen huge spikes at the grocery store. Though prices are going up, they're a little bit noticeably going up. Well, things are also shrinking, if you haven't noticed. So when you have total revolving credit and the economy not revolving anymore, your banks are really getting clobbered. And bank stocks are the weakest out of all the indices. And there's talk, like, we're at zero rates, which is not good for them because, I mean, it gets a little complicated, but if that's why Powell doesn't want to do negative rates, so blow up the banks. I mean, but they're screwed either way right now. I mean, they're just fundamentally screwed. People aren't taking on any more debt right now, and banks aren't lending because they know, banks aren't stupid. They know how weak the economy is, and the recovery is, any sort of recovery we see, it's not going to be as great as let's just say Trump supporters believe. It's impossible. Now, I'm not saying the stock market won't keep going higher, because if they keep printing, it could go higher. It's just, I've talked about this. Nominally, inflation adjusted wise, when you sell those stocks, they're not going. I'm talking about like the .com stock, or not .com, but tech stocks. You're going to see percentage gains versus the dollar, but the dollar is going to lose so much of its value in the future that you're not going to really see any gains, even if the stock market keeps going up. But normies and retail investors just don't know that. I don't even think Wall Street knows that. So listen, if the other guy wins, it really is probably the end for the red, white, and blue. I don't know, guys. That's all I think. I personally believe and think. I mean, this is crazy stuff. Because he's controlled by the far extremist left, like the Marxists. I mean, and the Green New Deal, if that gets passed, you're not going to see trucks, planes, and trains. No energy from oil, coal, which is clean these days with the technology. It's clean. Not just that, the byproduct, plants eat that. The big reef down by Australia, that's what creates most of the oxygen for the planet. What does it consume? CO2. And then they create oxygen out of it. This is the level of mind control. And people not being taught anything in school. But anyways, the things they want to pass and the things they want to do, they'll just destroy what's left of, I don't know, energy companies in the U.S. and everything, car company, everything. And they have this fantasy where everything could be clean energy from solar to windmills and what else? I don't know. It's all fantasy, guys. If it was profitable, none of it would need subsidies from the state, from the government. It wouldn't need subsidies for them to build these things. They would be profitable on their own. Not just that. Everything that goes into this sustainable energy, this renewable stuff, it consumes more and more rare minerals from the ground. So it makes no sense. You actually use more energy and oil to find those rare minerals to create solar panels and everything else and batteries. It's fantasy. The real agenda, I don't know. I don't even know if they believe their own crap, but it's unreal. That's all I have to say. And if he wins, like I said, plan for the worst. That includes plan B to get out of Dodge. Here's what stock markets see as the outcome of the November election. Well, red, which is Orange Man, is going up. Blue is much higher than he is, and that might come down. I think if I had to bet, I would put my money on Trump. But I still think it's very close. I just think it's close because everyone hated her, including everyone on the left. I don't think they hate the current candidate as much for the left. And he hasn't even picked his VP. His VP might be the the thing that might energize the left. Whoever his VP is, if he picks the right one. And I'm pretty sure they're going to try to pick the best to get the most votes, right? Although current events have scared the US and everyone is more comfortable with the current administration. Alright, covered that. Let's get to the gold and the COMEX. A potential crisis in COMEX gold. I'm just going to read all of this. It's actually very short. Alright, we are all used to the bullion banks covering their shorts on COMEX by waiting until the speculators are over bullish and vulnerable to markdowns that trigger their stops. Algorithmic traders go from long to short in the heartbeat as well, and they dump contracts into a falling market, speeding up the decline. We should say at this juncture that the managed money speculators are short-term attracted by futures leverage, and their gold position is often part of the wider risk strategy deployed by the hedge funds. They do not intend to stand for delivery. The wider investment world, taking strategic portfolio decisions, does not often get involved with gold. So the COMEX gold contract has been a secular play, meaning it's easier to short the metals and then drop the price in the past. By the way, this was authored by Alasdair that's a hard name. You can see it. Alasdair McLeod, VI goldmoney.com. Gold Money, I think that's Maloney. The table below shows a typical setup. In this case, July 16. The managed money category, 296,000 net contracts, is close to record long. Open interest was 633,000 contracts, and the gold price was at 1,360, having a run up from 1,040 the previous December. So back in 2016, price ran up from 1,040 to 1,360. So let me show you. Hold on. So I give you guys visuals, because a lot of guys like visuals. I like visuals. Nobody else like on the tube here does visuals like I do, which I should have a way larger following, but of course I'm shadow banned because I opened my mouth and I talk too many truths. Here's gold. So back in 2016, back here, it went from 10,040 and it shot up to 1340. Again, let me show you guys this because this is important. GDXJ, right? To show you what the mining stocks were doing while the price of gold was going up. Just look at this. Okay, it's the blue line. Look what the blue line did. When it went from 1040 to 1380 or something. You had a huge run up in GDXJ ETF. I'm not saying this is the best one to buy or anything. I'm just giving you guys an example. This is the most known one. It went up 130% GDXJ from its all-time low. That's why I said if you bought in March, the junior miners, when I was screaming and I did that huge fire sale so you guys could get in the private group and accumulate some mining stocks. If you bought it then, I mean, the GDXJ since March this year shot up 100%. Now, some individual stocks went up 6x, 10x, whatever, right? All right, so since that March low, that was the hugest buying. That was the very last big wealth generating, wealth transfer buy ever to accumulate. So right now the price of GDXJ is based on the price of gold at about 1,380. But right now, it's where? 1,800, right? So where does GDXJ and the miners have to go to catch up to the price of gold? It has to go way up. And it's going to do it really fast, guys. Especially if gold goes and makes a new all-time high above 2,000, above 2,000. I mean, GDXJ alone would have to still rally another 130%. Now, of course, other individual mining stocks and other ETFs will do even better. They'll do like maybe a 2x or a 5x or a 10x or something, and then some other individual stocks will do a 20x, a 50x, you know, those huge gains. If you know how to trade options or leverage up or use a margin account, which you shouldn't do unless you have 7 years experience, profitable experience, but if you do have that and you do that, I mean, you could, you know, change your life. Like, small amount of money could be a lot. All right. Anyways, I also see a giant inverse head and shoulder here for gold, for the price of gold, which is super bullish, which could shoot us above 2,000. Now let's get back to that article where the futures market may break and we get limit up and we just, gold makes new all-time highs. Where was that article? All right. So what they mean by potential crisis is everyone's going to want delivery and they're not going to be able to meet it. And then the rigging stops and we see, you know, a huge spike in the price of gold. Like maybe, I mean, I have no idea what it'll be, but it could be huge, like $100 in like a day, or maybe 300 in a week. I don't know. In the non-speculative category, the bullion banks swaps had 56% of the shorts, and the producer slash merchants 44%. Market-to-market value of the swap's net short position was $25 billion. Of the speculative longs, the managed money category, hedge funds, held 69%. So the hedge funds are holding 70% of the short positions, and the non-speculative category, which is your producers, your mining companies, and your merchants, your dealers, your bullion dealers, were holding the rest, which would make it what, 30%? All right. Anyways, there was a high level of bullishness. Easy pickings for the bullion banks, who by the following December drove the price to 1,120, reducing their net shorts to under 50,000. What they're saying back in 2016, what happened? That was back then in 2016. It was a game that evolved out of COMEX futures being used simply to offset long bullion positions at the LBMA. Over time, bullion bank traders increased their trading position limits as opposed to their pure hedging activity, making easy money jobbing the other side of the managed money trades. Now look at the current situation with the gold price at the decade highs of 1775 and open interest at 561,000, June expiration, June 30th. So listen, we have another record of open interest shorts on gold. And this was when he published this or wrote this, the price of gold was at $1,775. 1,775. Right now, gold is at 1818, and its all-time high yesterday. Give me a second. I didn't even look. This is sweet. Its all-time high was 1831. That's like a $50 increase from when he wrote this article. To give you guys perspective, that it's happening. It might be happening right now. Yeah, he wrote this 3006. Wait, what? I don't know. The 30th. So the last day, or the 30th of last month. Right now it's the 8th of July. He wrote this in June. So you guys can look at this chart. I'll post this in the newsroom. I don't want to talk too much about the numbers. Let's finish reading this. In the non-speculator category, the swaps are more short than they were in July 2016, despite open interest being 71,000 contracts lower. The market-to-market value is record net short at $36.6 billion. What has happened is the producer slash merchants have cut their positions, presumably deciding that hedging mine output is less important in the current inflationary environment. Consequently, the bullion banks are bearing 71% of the short exposure. So basically, the mining companies took off their shorts, because you have to understand, bullion banks and mining companies short gold in case the price of gold falls, so they have cash. Then they sell their shorts or take profits. Then they have cash for operating and continuing to mine the metals while the price of them have fallen. But pretty much the entire mining sector has decided that, yeah, we're in a new bull market. We don't need to hedge our operations and our reserves within the ground, because that's what futures markets are for, guys. They were for farming and commodities. So producers who create the stuff could hedge because of seasonal change and because of market fluctuations, demand and supply and prices, right? All right, anyways. The speculator category makes this more interesting still. At 138,000 net long, hedge funds are only 25,000 contracts longer than average, and compared with their bullishness in July 2016, have hardly got going. So basically, the hedge funds aren't really that long, guys. There's not that many of them long yet. This party, I'm telling you, hasn't really started. It is the other categories, other reported and non-reported, have taken 56% of the long side, which is your retail sector and your offices, family office money managers. And they are not behaving like skittish hedge funds at all. These include family offices, the ultra wealthy, and foreigners through Globex who are standard for delivery as means of getting their hands on physical bullion. 171 tons from the June contract alone. So all of these offices, foreigners, and the super wealthy, they are standing for delivery. Meaning they're not going to sell their options and their futures contracts. They want the physical stuff. And as we all know, they don't have it. What is that going to do? It's going to break this COMEX market. It's going to break this manipulation that keeps the market from rallying in a really big way. And it might happen at the end of this month, which I'm really hoping for. Bullion banks are between a rock and a hard place. For years, they've been playing the hedge funds as an angler hooks and plays a fish. Basically, the bullion banks have been playing this game with the hedge funds to short the metals because it's guaranteed, and the hedge funds are good at doing it. They have been good at doing. So have the big institutions like JP and Deutsche and all these other banks. But lately they've been getting smoked because the price just keeps going higher and higher, and they don't have enough paper funds to keep it from stopping it, basically. The game has seized, and there is no easy way for them to get level. For the momentum, they are trying to put a lid on the price, but the cost has been rising open interest and therefore rising market-to-market positions. The August active contract runs off the board at the end of this month, and bullion banks are likely to be forced into large delivery volumes again. Furthermore, the exchange for delivery arbitrage facility between COMEX and LBMA is broken, allowing COMEX premiums to London spot to go unchallenged. It is increasingly possible that the gold contract is evolving into deep crisis, and that force majeure might have to be declared if, as seems increasingly inevitable, a wider banking crisis ensues. Yeah, guys, I've been talking about this. I made a few videos about this a few months ago, beginning of this year, and it still hasn't happened yet. You know when it's going to happen? When you log in and you look at the price of gold and silver, and they've rallied 30% or 10% or 20% in one day. All right. And then nobody, and I mean nobody, can ignore these junior mining stocks and all these awesome stocks I've been researching for a very, very, very long time. 5 years. All right, guys. 20% off. Go to my website. Use the link below this video to get the 20% off. The information you gain, I share my trades so you can learn. Trust me, it pays for itself. And then some. And maybe a lot some. People who trust it, people who joined a year ago, 2 years ago, they're up. They're doing great. All right. And I don't know when we're going to make new all-time highs in gold, but I know when we do, that window of opportunity is gone for the massive, life-changing stuff. So at least get your feet wet and put a little bit of something in there, right? To, so you don't regret it later. That FOMO opportunity, the FOMO is now. Because if my feet wasn't wet and I wasn't holding any mining stocks, I would be kicking myself because I missed out on a lot of gains. And I would not want to miss out on the rest, right? And believe me, the party hasn't started, but it will, I think, soon. I've been saying it for a couple months now that this summer is going to be an awesome summer. So far, it has been. Now, is the stock market going to correct? Well, I'm already over an hour. I might as well keep going. You guys could always speed up the video. You guys could always listen to half of it now, half later. I don't know why people can't understand that. If anyone complains that the video's too long, well, you're a dumbass. Just speed up the video or just stop listening to it and come back to it later, right? I do that all the time with other people's videos. All right. What was I gonna talk about? All right, TA and the charts. You know what? I'm just gonna leave it for tomorrow because I want to upload this video today. It takes like an hour or more to upload these videos. I'll do a chart. I'll do charts tomorrow. I'm gonna do charts for the private group tonight. Maybe it's already getting late. It's 9. All right, smash them likes. Leave anything in the comments section. Not anything, but leave good quotes or comments in the comment section. Please share my videos. Only way my channel grows, and I'll continue to do this. Until next time.